Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video. We're going to be looking at the USDCHF. But before we get started to break down this Forex pair, we have to state that this video is for educational purposes only. This is not for financial advice, okay? But we all know why you guys are here, which is to help improve your ability as a trader and to find good, credible Forex content that can help put a little bit extra money in your pocket. So with that being said, let's go ahead and see what we can do about that, okay? Now, before we get to physically talking about what's going on in the chart, let us discuss what is happening with the overall fundamentals of the currency, okay? Now, we'll start with CHF first. CHF still remains one of our weaker currencies. It did have some poor news come out about it during the during the last trading week. And then on top of that, CHF is one of the major three European currencies. And the European currencies do have some instability due to the Ukrainian-Russian war that is related directly to the war being fought physically on the European continent. So the whole entire European economy has a lot of FUD, fear, uncertainty, and doubt associated with that. And then also, too, it is one of the countries that started to put sanctions against Russia. And a lot of the European countries are actually suffering more from the Russia sanctions than Russia itself. Okay. So those are the several factors that's going on. And also, it's also dealing with its own form of inflation as well. Okay. So those are the factors that's going on that's causing this currency to act as weak. Okay. Now the USD, as we discussed in previous videos, it still does have an overall cloud of inflation hanging over it, and we did get some poor economic news come out about the latter part of last trading week with this currency, and but also the Fed decided to increase the interest rate of this currency from 25% to 50% to combat the inflation, and then the Feds did release a report saying there was news reports saying that the Feds are going to be looking to combat inflation a lot more aggressively due to how out of control inflation is going to be. So we're going to have to wait and see how these things are going to play out in the market. Okay. So we're kind of in a limbo with USD, where it can either tilt to the strong side or tilt to the weak side. Two factors that's going to really contribute on whether it's going to be strong is weak is the interest rate is how the interest rate is going to deal with inflation. If the increase in interest rate is not effectively dealing with inflation or not effectively dealing with it in a timely fashion, then that will start to cause fear, uncertainty, and doubt in the U.S. dollar, and it will continue to maintain weakness or even get even more weak than what it currently is. Okay. Now with that said, let's go ahead and break down, tap it on the chart. All right, so here we also had some consolidation that was going on for about 30 to 40 days before we went and had a breakout. Then we did have a breakout that just started to come down. And at the beginning, during the most of the, excuse me, then during most of the beginning of this trading week, we did have going up towards the north side. Then we started to have some retracement down. Okay. Now we may still have a push back down to this area here before we continue to go up towards the long position, or we may start to range out in this area here before we start to go towards the long position. Okay. But we're not dealing in a situation of which currency is stronger than the other. It's more so about which currency is much weaker than the other, because the one that's going to be the weakest one is going to act as the weaker one, and the one that's not so weak is going to act as the one that is strong. So you have to understand that we're not in a market where we're dealing with which currency is stronger than the other. It's more so we're dealing with which currencies are weaker than the other. Okay. So we're going to have to see how this is going to play out, but from a technical analysis standpoint, coupled with the fundamentals, we may, if it decides to get pushed down some more, we may push down to this area here before we start to range out and go up. We could range out and go up from this area here, range out, go up from this area here, or we could go back up right from this area here. So we have to look out for that for those few scenarios. Um, Now, the simple deciding factor is that there's no war being fought in North America, and there's a war being fought in Europe. So on the best end, it looks like the CHF is going to remain much weaker than the USD. Okay. Highly doubt will break down into this range area. The only way that would happen is if the USD becomes much weaker than the CHF. But it looks like the American government is very much actively trying to look into how to deal with this inflation. And just that lose alone can make the USD start to have some type of inherent strength or not be as weak as it has been before during the past trading weeks. Okay, hope that information was helpful for you guys. Happy trading.